Good morning, everyone, and welcome back to Morning Markets, where the team at True Potential discuss the events in the past 24 hours that are impacting asset markets. Today, we'll focus in on a return to volatility in the US equity market in particular. Yesterday was a game of two halves, if you will, if we look at the equity market performance that we saw in Europe and then contrast that with what we saw in the US overnight. Equity markets in Europe, in the main yesterday, were in positive territory. Euro Stoxx 600 up 60 basis points. FTSE 100 an even better performance, up 1.3% on the day. Large part of the strength in the European performance comes from the weakness that we've been seeing of the euro and sterling relative to the dollar. Another way of thinking about that, dollar strength over the past number of days. Dollar strength itself is an interesting point for us to be discussing, just given how over the past number of months we've been thinking about dollar weakness as being a predominant trend in the market. And some of this, I think, goes back to what the Federal Reserve said last week, or maybe didn't say, in terms of providing the market some clarity on how they're thinking about average inflation targeting. So over the past couple of days, we've seen inflation expectations change in the US, and that has caused the dollar to strengthen a little bit over the past number of days, and indeed that has been accelerated just yesterday and the previous day. So that's something to think about in the background. I think also we've seen a number of Federal Reserve officials discussing what they have been doing in terms of monetary policy, but also suggesting the need for further fiscal support for the economy in the US in particular. Now, I don't think that's something new. I think if we go back and we look at FOMC minutes, we look at speeches that have been given over the past number of months, that has been there. I think maybe what has changed is just the market has started to focus in on that a little bit more, given the political backdrop in the US and the realization that potentially over the coming months, given where we are and approaching the 3rd of November, it is maybe unlikely that we will see further fiscal support packages coming through in the US, maybe until even January of next year, when the presidential process has been completed. So that realization, I think, is impacting sentiment in the market. And we know when we look back at the various different lenses that we look at the market, that's one of the key factors that has been supportive over the past number of months. Also yesterday, we had economic indicators in terms of the purchasing managers indices, which are surveys and give us an indication of how both manufacturing and services are thinking about the future in terms of their business. An interesting breakdown within that, where in the Eurozone in particular, we continue to see a positive reading above 50 for manufacturing. That wasn't the same for services, and the services side is probably reflecting the speed of which the COVID-19 situation continues to evolve. Rising infection rates play into restrictions on activity, which feeds into economic sentiment and hits services before manufacturing. So that's something just to notice, that two-speed approach, where manufacturing continues to be more positive, where services we're starting to see bit of a decline from the levels that we saw earlier this year. The other thing that we're thinking about and focusing on today is just in the UK, where we have heard from the Chancellor that there won't be an autumn budget. Instead, we're going to get detail on further support packages from an employment perspective, just given the ongoing backdrop that we have with furlough scheme rolling off, but at the same time, these increased restrictions, which will certainly impact certain areas of the economy. So jobs, a feature in the UK today, also a feature in the US, where we have the weekly unemployment report. And again, that should hopefully continue to indicate ongoing improvement in the US employment situation, and we'll report back on that tomorrow. That's it for today, and please join us again tomorrow. Many thanks.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.